The stress test explained. Let's talk numbers. 60 million transactions in 24 hours breaks down to approximately 694 transactions per second sustained over an entire day. That's not a burst. That's not a 5-minute spike during optimal conditions. That's relentless, continuous throughput at a level most chains can't touch even with centralized validators. Bitcoin processes around 7 transactions per second. Ethereum sits around 15 to 30, depending on congestion. Even Solana, which markets itself as the speed king, averages around 3,000 transactions per second, but has repeatedly failed under pressure with network outages that lasted hours. Kaspa is attempting to prove something different, not just that it can handle high throughput, but that it can sustain it without sacrificing decentralization or security. That's the holy grail. That's what the blockchain trilemma says you can't have. And right now, in real time, Kaspa is either proving the trilemma wrong or exposing its own limitations. Here's why this matters beyond just bragging rights. Every blockchain claims scalability. Every project shows you controlled demo environments where everything works perfectly. But stress tests under real conditions separate marketing from reality. If Kaspa'S network buckles, if transactions slow down, if nodes start dropping off, that tells you the technology isn't ready for mainstream adoption. But if it holds? If 60 million transactions process smoothly with sub-second confirmations, then we're looking at infrastructure that can handle actual global payment systems, not just speculative trading. That's the difference between a blockchain experiment and a blockchain revolution. The timing of this stress test isn't accidental either. Kaspa'S price has been swinging, confidence has been tested, and critics have been vocal. This is Kaspa putting its technology where its mouth is. Either the network proves its claims under the most brutal conditions imaginable, or it reveals weaknesses that need fixing before scaling further. Quick pause. If you're getting value from this breakdown, hit that like button right now. It signals to YouTube that this content matters and pushes it to more people who need to see what's happening with Kaspa. And if you're not subscribed to TJ Crypto World, fix that immediately. We're covering real-time crypto events without the sponsored garbage that floods this space. Turn on notifications so you don't miss the follow-up when we analyze the stress test results. Trader versus holder strategy. Now, let's address the elephant in the room. Price is down. Kaspa has been bleeding like most of the market, and that raises the question every investor faces. Do you trade the swings, or do you hold through the chaos? Here's the brutal truth about trading Kaspa right now. The volatility is real. When major stress tests happen, sentiment swings wildly. If the test succeeds, you get immediate price reactions, as traders rush to position themselves. If problems emerge, panic selling creates flash crashes that recover just as fast. That creates opportunity, but only if you can execute without getting eaten alive by fees and slippage. MEXC is giving traders an edge here with zero-fee execution on Kaspa pairs. Think about what that means strategically. Traditional exchanges charge you 0.1% to 0.25% per trade. If you're actively trading volatility, that's 0.2% to 0.5% round trip. Do that 10 times, and you've given up 2% to 5% of your capital before you even factor in timing. Zero fees change the equation. You can reposition constantly as data flows in. When transaction throughput numbers update, when node performance metrics shift, when sentiment changes on a dime, you can adjust without bleeding capital to exchange fees. That's not a small advantage. Over dozens of trades during a volatile event like this stress test, that's the difference between profit and break even. But here's the counter argument. Trading requires attention, discipline, and nerves of steel. Most people who try to trade volatility end up buying peaks and panic selling bottoms. They watch charts obsessively, make emotional decisions, and underperform simple holders who did nothing. The holder strategy is different. It's betting that 10 years from now, Kaspa'S technology will have won market share from outdated chains that couldn't scale. It's recognizing that short-term price swings don't matter if the fundamental thesis plays out. Bitcoin holders who bought at $200 and watched it drop to 100 felt stupid, until it hit 20,000, then 60,000. The ones who held through the chaos won. Kaspa holders are making a similar bet. They're betting that proof of work with actual scalability will matter more than venture capital hype. They're betting that fair distribution will create lasting value. They're betting that in 2035, when they look back, buying CAS at 7 cents will seem like the most obvious decision they ever made. So, which strategy is right? That depends entirely on your skills and temperament. If you can read charts, manage risk, and execute trades without emotional attachment, this volatility creates opportunities. If you can't, if you're going to stress over every 10% swing and second-guess yourself constantly, holding is probably the smarter path. The decade outlook. Let's zoom out for a moment. Why does anyone believe Kaspa will outperform most crypto and even challenge fiat systems over the next 10 years? That's a bold claim that needs backing. So, first, let's try to understand what money actually is. Money, at its core, is a technology for storing and transferring value. For centuries, people used physical objects like gold, silver, shells, and even cigarettes in prisons as money. Then, we moved on and digitized it with things like credit cards and bank transfers. But honestly, those systems are slow, they're expensive, and they're controlled by centralized authorities who can freeze your funds or just inflate the supply whenever they want. Bitcoin proved that decentralized digital money could actually work. But here's the thing. Bitcoin is slow. 7 transactions per second just doesn't cut it for global commerce. The Lightning Network helps a bit, but, well, it adds complexity and comes with its own set of trade-offs. Ethereum tried to solve this problem with smart contracts, but it ended up sacrificing speed and cost. Gas fees during peak times made it, honestly, unusable for small transactions. So, Kaspa'S approach is different. The idea is to keep the proof-of-work security that makes Bitcoin trustworthy and keep the decentralization that prevents control. But, solve the speed problem through block DAG architecture instead of those old-school linear blockchains. If the technology works, and this stress test is really proving whether it does, then Kaspa becomes what Bitcoin was supposed to be: fast, secure, decentralized money. Over 10 years, adoption compounds. Today it's stress tests, and honestly, a lot of speculation. Tomorrow, it's merchants accepting KS for payment. Next year, it's Layer 2 DeFi applications. 5 years from now, it's countries exploring KS reserves alongside Bitcoin. And 10 years from now, if Kaspa executes, its infrastructure millions of people use daily without even realizing it. That's the holder thesis. Not that price goes up because, Elon tweets. Not that venture capital firms pump their bags before dumping. But that real technology solving real problems gradually wins market share from inferior solutions. It's the same thesis that made Amazon shareholders wealthy. The same thesis that made early internet investors fortunes. Boring, patient, long-term conviction in superior technology. The fiat comparison is even starker. Every dollar you hold loses purchasing power yearly. The Federal Reserve targets 2% inflation officially, and, honestly, delivers more in practice. Hold cash for 10 years, and you're guaranteed to lose 20 to 30% of your purchasing power. Minimum. Hold assets that increase in scarcity or utility, and you preserve wealth. Kaspa'S fixed supply and increasing adoption create the opposite dynamic. Instead of dilution, you get concentration. Instead of centralized control, you get decentralized verification. Over a decade, those differences compound massively. Before we wrap, if this analysis helped you understand what's happening with Kaspa right now, smash that like button. Share this video with your crypto group chats because, honestly, most people have no idea this stress test is even happening. Subscribe to TJ Crypto World if you want more real-time analysis without the paid promotion nonsense. We cover what matters, not what sponsors tell us to cover. So, where does this leave you? The stress test is happening right now. By the time you watch this, we might already have results. If Kaspa processed 60 million transactions smoothly, the conversation shifts. Critics lose ammunition, believers gain confidence, and the technology proves it can compete with anything in the market. If problems emerged, that's valuable information too. It shows where development needs to focus. It reveals weaknesses before they become catastrophic failures under real-world adoption. Either way, you're watching blockchain evolution in real time. Your move depends on your strategy. Traders can capitalize on volatility, especially with zero-fee platforms like MEXC eliminating friction. Holders can ignore the noise and bet on decade-long technological superiority. Both approaches can work. The only losing strategy is doing nothing while pretending you'll buy the dip eventually. Kaspa is either proving it belongs in the top tier of blockchain technology, or it's revealing limitations that need addressing. Either outcome gives you clarity. And in a space full of vaporware and broken promises, clarity is the most valuable asset you can have. Thanks for watching TJ Crypto World. If you want to understand what happened after this stress test concluded, Check out our follow-up analysis video linked on your screen right now. We'll break down the results, the network performance, and what it means for Kaspa'S price action moving forward. Until then, stay sharp, stay informed, and never let the market make decisions for you. I'll see you in the next one.